Hi, welcome to this video, Dave, which is on the 25th of July. It's Sunday. It's our weekly Forex forecast. Just going to pick out some pairs which we think could offer really good risk-reward trading opportunities for the week ahead. Got quite a few pairs to look at. We'll go over to the charts in just a moment. Now, in recent weekly forecasts, we've been pointing out the best way to trade FX markets is to do very simple, fundamental sentiment analysis. And that makes your technicals very easy and keep them very simple. It's the big fundamentals and the sentiment towards them that drives big trends. If you want to catch big trends, you need to look at the fundamentals and sentiment first. Now, in terms of the market at the moment, it's been a really good period of trading. July has been really good. June was good as well. And I think the volatility's picked up. We've got some nice trends in the market. And I think the high volatility will hopefully continue. Now, the week ahead should be a busy one. We've got the Fed, of course, which is a major event of the month. We've got plenty of economic data out as well. Right, what we're going to do now is we are going to go over to the charts, but just before we do so, please do keep in mind it is my view as of right now. It can, of course, change in line with the market action and conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 FX pairs, all you need to do is click on the link beneath this video and you can get live access to our member center. You can also join our Facebook group of traders, follow us on Facebook and check out our recommended regulated ECN broker. Right, news charts on our member center. I've just been doing some updates for the weekend, so let's go and take a look at them. Right, first chart we're on is Euro USD, and we've been bearish of this one since the start of June and still remain heavily bearish. It's been a great move to the downside. It's slowed up here. Volatility's dropped a bit, but it's about 550 pips. Just the fundamentals, sentiment, out and out bearish for the euro. Now, in terms of trading this pair, we've taken off 50% of our position. We think there might be a rally coming, and we'll look to sell back up to resistance on weakness, or if we break 117. That is heavily bearish. You can see our targets are 116, then 114. I'm actually going to extend that to 110. Okay, if we look at the monthly chart, you can see the euro has a nice rally. We've topped out, we're coming down. There's the 117 level that needs to be taken out, these two candles here. Monthly high should hold, and then down to 116, down to 114, and I'm going to extend it down to 110. Obviously that is a longer term target. Fundamentals couldn't be more bearish for the euro in our view. And in terms of the fundamentals, if I just go here, you've got inflation soaring in the US. It's not really going up in Eurozone strongly. This is core inflation difference, but for Euro USD, you can see core inflation going down, but the euro hasn't caught up with that inflation difference. Obviously, inflation much higher in the US than in Eurozone. We had the ECB this week, and they were as dovish as people I think expected. That's why the euro didn't move down strongly. They're not going to stop their money printing. The Fed are. Now, in terms of in Eurozone, they can't stop money printing or stimulus in Eurozone. Look at this chart. This is for Italy. Who is buying all of Italian debt? It's the central bank. You can see it here. So how can you withdraw stimulus? Countries like Italy just can't take higher borrowing costs. There's no end to stimulus in sight in Eurozone. And all this talk of a big Eurozone recovery, covered it last week, that's just a myth. US economy is doing far better. And what I find rather surprising is this chart here. Despite the euro coming down, okay, well, what have we got? We've got speculators long of the euro. Look at these asset managers up here. Hedge funds have just dropped to a minor short, and there's the overall speculative position. So despite the big fall, speculators still heavily bullish. I think they're going to change their view, okay, and the euro is going to go further to the downside. You've also got yen speculative positioning over here. We're still very bullish of the yen against the euro, and speculators want to be long the euro. We think they're going to get taken out the market. So in many respects, recently there's not been too much volatility. Overall, it's been a really good fall since June, but we are going to get a big move to the downside, and also that is going to drag down all the euro correlated currencies or proxies. I'll look at some of them in a moment. So look to sell back to resistance. Okay, stop I've still got behind 119. That's a major level, or take a break of 117. So yeah, 116, 114 I've got here, but longer term I'm looking for 110. Right, let's go to the next pair that we really like. AUD USD, break the 20-day moving average and move to the downside. And we only get back to it once here, just poke through it. 20-day moving average is the green line. Strong trends, it tends to hold price. You can see the same in Euro USD. So 400 odd pips in this one. I think there's more to come. You can see my target 70, then 65. I'll just show you the monthly chart. AUD USD. And I want the monthly. What we have is the big sell-off on COVID, the exhaustion tail. Then we come back up. We get through the 70 level, come back, double bottom at it. So that's our first target. And we think we could run on to 65, okay? So, yeah, plenty more downside potential to come. And if you look at the chart, since June, what have stock markets been doing? They just keep hitting new multi-year highs. That would normally support the Aussie, but it hasn't helped, okay? Commodities have been really firm in the period as well. That would ordinarily be supporting the Aussie. Just hasn't been. So, if bullish news cannot rally, or potentially bullish news can't rally the Aussie, it looks like it's got further to go to the downside, okay? A lot of problems in Australia with COVID, obviously, but I think the main driver will be commodity prices. And there's one commodity to watch if you trade the Australian dollar. It's iron ore. I'll just put up a daily chart here. It's been a massive move to the upside, since the COVID pandemic hit, and then you had the central bank stimulus and so forth in the global economy. Really big rally. It's the biggest bubble in commodity markets. I think I was saying it last week. I was looking around to find if anyone was really bearish longer term of iron ore. No, you can't find anyone, or I couldn't. They're saying current prices are justified. They're not justified at all. It's a speculative bubble. Like all speculative bubbles, they just burst. Lumber was one recently that did so. Lumber, massive move to the upside. Everyone bullish, and it just collapsed. Now, we have seen some resistance come in here. Now we're starting to see iron ore sell off strongly. If we can get down to this level, it'll help the Aussie get down to 70. And if we went down to this level, is a bubble. It could well get down here. Could see the Aussie go down to 65. Iron ore, 45% of all Australian exports. Commodity complex, generally overbought. Iron ore for us is the biggest bubble. Okay, so let's go back and go to. Oh no, just before we leave this pair, how would you come into it? We've got our stop at 74.80 behind the 20-day moving average, and if we were stopped out, we would probably either come in through 74 again or come off the 75 level. Obviously, we'd have to see how things go. We've had to bring our stop down to protect some profit. It's a decent profit. So, she can always rally a little bit more than our stop. But long-term bearish rallies will be selling opportunities, 70 then 65 for us. Where should we go next? Go to USD CAD. We've had a big position in this one since June. I've lightened it recently, but we're really bullish when we got down to 120. Speculators heavily net short of the USD, and not everyone, but most market forecasters saying it was going even lower. We didn't. We rallied strongly. Retracement, rallied strongly, and then a retracement. last video I did about 2 weeks ago, I think. We've come out of the long trade we were holding. You can see it there. We're long at 123.30, banked at 125.60, and I've come in almost, where I exited, coming at 125.80. To see that as just kind of correction of overbought, double bottom on the tails, nothing doing on this candle. This level here, 125, should support in our view. It's also the 20-day moving average, which hasn't been taken out since we went on the big bull run, okay? So stop back behind this level. I've got it at 124.20. We're looking for a move up to 128, then 130, then 135. Heavily bearish, obviously, of commodities, okay? Now, in terms of the commodity that you need to keep an eye on, in terms of the CAD, it is crude oil. Let's go to the daily chart. Sorry, I've got the USD CAD, my apologies. So crude oil, let's have a look. Big move up, then you get the big move down, and now we're making a move to the upside. 20-day moving average should provide resistance. So I don't see crude oil running away to the upside. I think the risks are to the downside. So we'll see. There's plenty of other commodities to go down to hurt both the CAD and the Aussie. Oh yeah, on terms of this pair, just before I leave it, on the COT net traders positions, speculators were really heavily short down here. Okay, they've lightened their shorts off, but they're still short. I'm sticking with the big trend here, looking for far higher prices. We shall see. Right, let's look at just a few more dollar pairs, then we'll go and take a look at some yen GBP pairs. Right. Just before we go and look at some more USD pairs, just want to bring up this chart here from the market here, which shows basically positioning of speculators in the USD just generally, okay, on the COT net traders positions. And you've got three groups: non-commercial speculators, asset managers, leveraged funds, okay? Now, in terms of these three groups, they were heavily short of the dollar, and they're covering out shorts, okay? Asset managers, a huge group. This is a record short. You can see my cursor is in the bottom right. We saw some dollar short covering, down again. Now we're seeing more. We're seeing leverage funds and non-commercial speculators. That's big speculators, okay? Just looking like they're going to get into the long side of the USD. I expect all three groups to go long of the US dollar. They'll cover out their shorts and then become bullish of the USD, which should push the USD further to the upside. Now, of course, we do have the Fed on Wednesday. Market obsessed with them. When are they going to reduce stimulus? They're not expected to talk about it even until August, and possibly reduce it in the new year. If they don't talk about it this time round, well, that's kind of in the price, isn't it? The Fed are very concerned about inflation. We're going to get inflation data out next week, including the Fed's favourite inflation indicator, the PCE. I would think that'll come in above forecast. All recent inflation data has inflation is running wild in the US, or really strongly, and has to be stopped. And the Fed are worried about it. The market seems to think they'll delay stimulus as long as possible. I think they might move quicker than the market expects, even if they don't. That's in the price already. There's still plenty of dollar shorts to come out and people to turn bullish of the USD. Right, let's take a look at just a few USD pairs, then go and look at some yen and GBP pairs. Right, USD CHF, US dollar against Swiss franc, and heavily bullish of the USD. We had a nice trade when she stormed up, then she came back down. Now we're kind of just hanging around, not too much volatility. I think we're building a base for a move up to chart highs, then longer term onto the big power level. Yeah, it's not the most volatile pair, but it does, when it gets trending, offer really good trends. Really good one up there to the upside, and a big one to the downside there. So yeah, not the most volatile pair, but I like the look of it from a long-term trend trading perspective. Good risk to reward. In terms of the next pair I want to look at, it's one of the euro proxies, which we've been interested in for a good while. It's USD PLN. If the euro goes down heavily, the PLN will really get hurt. We've been basically following this one for a good while when she bottomed out down here and broke the 20-day moving average. We had a few trades in it. It's had an okay move to the upside. It's not been back to test the 20-day moving average. I think if we get through 390, we should bounce up to chart highs. But if we look at the monthly chart, I think we could go to 4 and then longer term up to 420. Yeah, big problems in Eurozone. PLN or Poland is very exposed to exports, and it's also, I've gone back to the wrong page, it's also deeply affected by the disruptions in the global supply chains, more than probably any other nation in Europe in our view. So this one going up, it's a nice firm uptrend. Next one, USD MXN. This has been a tough pair to trade actually, because it's been pretty choppy. All this sideways action here, then we break up and then we come back down. If we get through here, you could pop your stop just behind the 20 level and see if she runs to the upside. If the dollar mounts a broad-based rally, and the Mexican peso, being an emerging market currency, should get hit hard. Okay, so looking for a really big move in USD MXN. If we can break out to the upside and we start gaining traction, that tends to weigh across all emerging market currencies. Right, one more USD pair to look at. It's our actual favorite in the emerging markets for a while. It's USD ZAR. Nice move up through the 20, support at the 20, up, going up again. Okay, an emerging market currency, obviously, like Mexican peso, very exposed to commodity prices, and it's got domestic problems as well. With all the violence we've had and unrest in South Africa recently, I think this is a firm uptrend and going up towards the 16 level. If you wanted to buy it, if you get any strength above that high, come in, pop the stop there. Okay, or if we come back this level, you can come off the level or go just through the 1480 level. Strong uptrend, and I think there is more upside to come. So we shall see. They're the dollar pairs that we really like the look of. They've done well for us. Obviously, when you're having a good run, is the time you can get stopped out by a bigger move against you than you thought. Okay, but if we were to be stopped out, we'd be looking probably to rebuy the dollar. I think longer term dollar is looking really good. Right, let's take a look at some yen pairs quickly and some GBP pairs to finish. Right, we are in the Euro JPY, and in terms of speculators in the JPY, generally they are heavily short the JPY. Okay, in terms of JPY, as shown, decent strength. Okay, in the Euro, got a few short trades come through the 20-day moving average. Resistance into it, down, coming back up again to test it. Okay, now in terms of this trade, if you want to come into it fresh, you just sell a break of the lows here, stop back behind the 20-day moving average. If we broke up through the 20-day moving average, our stops behind that level, we'd probably sell back through the level, or if we got through 131, sell back through level, stop behind 132. We should go to 128, then 126. So we're looking for more speculators to get taken out. Good strong downtrend, rally, be a selling opportunity or a break lower. Let me go to the next yen pair, AUD JPY. Now in terms of this one, again, decent run to the downside. We're on our second trade in this one. Look at the 20-day moving average. Just holds price. One brief spike through down. We haven't been near it, okay, for a while. I would sell through here, through the 81 level, coming in fresh. And we're looking for 77.50, which is big weekly support. Your stop doesn't need to be too far away. If you're coming in fresh this trade, you might want to risk it behind the 20-day moving average. If we go up to 82 to test the 20-day moving average, look for weakness off the level. If we break it, sell back through, stop behind 83. Hopefully that's explained correctly. What What's the next yen pair we want to look at? It's the last one I want to look at. It's CAD JPY. This really nice bounce in the CAD coming up to the 20-day moving average. We were stopped out on that bounce, so I want to come in at 87.65, so just basically through the low, and I'm going to use a tight stop at 88.80, and looking for 84, then a run on down to 82. I didn't draw the line in. I think the CAD, I've said it in a lot of videos recently, really overbought just generally. So good downside against the yen. What other pairs should we look at? Let's look at the GBP. Just going to finish off with GBP CAD. I do like the look of the GBP against the NZD and the AUD, but I think this is probably the most attractive setup of the three. We had a nice move up there, which we got good part of the move. But look at that exhaustion back. Big red goes through the 20-day moving average, comes up to just beneath it. Then we get through the 20-day moving average. Now we're sitting above it. That big fall, I think, is a buying opportunity. If we just get through this high again, 173, I'm going to say 173.30, we should gravitate up. I didn't draw my line across here, to 177. Then we should go up to 180, which is up here. So good risk reward. Risk off. If it comes, the pound will get an additional boost. It's a safer currency than the commodity currencies. Also, if you think about it, USD and JPY have done well when stock markets have really been on a tear to the upside. They would normally be going down. They're both firming. Okay, so if stock market's correct, they should get an additional boost. So yeah, in terms of our strategy, it's fairly simple. Just looking at big fundamental sentiment towards them. Technicals, very simple, and it is the way to catch really big moves. We've had a good run. I'm hoping that is going to continue, but really looking forward to the up and coming week. Plenty of data, and of course the Fed. So we'll see what happens. I might even do a video before and after the Fed if I have time. But yeah, we shall see. But that is the video for today. Thank you very much for watching it. Take care. Have a good day.